5 reasons why you should invest in the stock market right now. The first thing is because of compound interest. The sooner you get in, the more time your money has to grow exponentially. The longer you're in the market, the better off you will be. Based on prior interest earnings, if you contribute $285 per month at the age of 25 until you reach retirement age of 65, you'll be a millionaire. Conversely, if you start investing by age 30, you will have to contribute over $400 in order to become a millionaire by age 65. Now, I know people have been worried about a recession for the past several years. However, you can't time the market. No one knows exactly when a recession will hit. With that being said, in 2019, despite recession fears, the market still gained over 30%. Secondly, although a lot of people fear the stock market because it's risky, it's somewhat secure. And a lot of people actually rely their retirement on it. These are your retirement funds. These are your Roth IRAs. Newsflash, it's in the stock market. So it can't be that risky if you are holding your entire retirement income in the stock market, which is supposed to support you for 20 to 30 years after your retirement. Number 3, the stock market is way better than holding cash in the long term, because the cash is susceptible to inflation. It loses value year over year in a healthy economy just because of the normal import and export of goods and the trade of goods that our Federal Reserve prints more money. Thus, the value of the dollar goes down. So when I say holding cash, this means that your money is in a checking account or savings account. I understand you may have a high interest rate for your checking or savings, which is maybe 2%. Let's say you even have 5%. But the stock market is going to beat that on a consistent basis, just because on average it's 8%. And if you don't earn at least 2% of inflation, you're essentially losing money each year in these low interest accounts. Number 4, the stock market grows faster than your salary. According to the U.S. Census Bureau, household incomes went up 1% from 2017 to 2018. However, the stock market, since its creation in 1926, all the way through to 2018, it has earned 10% interest on average each year. When is the last time that your salary has consistently went up 10% each year? For those of you who are blessed enough to have 10% raises each year, were you working your butt off for those raises? Or was your money making money passively? Okay. This is why the stock market is good, because you make money passively. And there's not too many avenues where regular people can earn consistently those type of passive returns. Number 5, the stock market tends to pay dividends. Many companies, when they do well or perform well, they will share their revenue with their shareholders. So this is essentially free income each quarter that you're receiving just by holding a share of this company. Bonus tip, increase your contributions to your retirement accounts first before going to the open stock market and using a platform such as Robinhood, Betterment, or Wealthfront. And this is because your account in the open market is not tax advantaged like a normal retirement account. So any earnings that you gain, a lot of you will be subject to at least 30% because they add whatever money that you made to your income. With that being said, start investing now. I know a lot of people feel some type of way about capitalism. Unfortunately, we are in a capitalist society, so sometimes you have to play the game. Keep the conversation going. Thank you so much for watching this video. Let's stay in tune. Let's share our lessons learned. Get your money up. Feel free to share any tips that you've learned by investing in the stock market in the comments. Please share this video and start conversations in real life.